Welcome everyone to Vested Interest, back again for another stock pick of the day. Today we are going to take a look at Bristol Myers Squibb. It is out of the healthcare sector. It is February 28th. Let's jump right in the video. I do want to thank everyone who has taken the time to watch, comment, and subscribe to the videos. Special thank you to those who have subscribed. And if you have not subscribed yet, go ahead and hit that subscribe button down below and join me on this journey to financial freedom. Hopefully you're on your own journey as well. And if you find value in the content at any time, hit that thumbs up, hit that like button down below. Again, we are going to cover Bristol Myers Squibb. You can check them out at their homepage, www.bms.com. That is where I pulled this information from. At Bristol Myers Squibb, we believe in the power of science to address some of the most challenging diseases of our time. Our focus on these unmet needs comes during a remarkable time when unprecedented scientific breakthroughs are advancing the treatment of disease as never before in human history. We work every day to transform patients' lives through science. Each day, our employees around the world work together for patients. So I want to stop there, around the world. So this is a global company, right? They obviously sell pharmaceutical drugs. You go ahead and look at what all they sell, right? A lot like Pfizer or Johnson & Johnson, Merck, right? Similar company to those brands out there. You're probably aware of some of their, and maybe even if you're older, maybe take some of their pills. I actually take some stuff for high blood pressure myself. It doesn't come from Bristol Myers Squibb, but I am in that age group that's starting to take some pills, right, for medication. So I'm not going to read this off. If you want to know more about them, like I said, go ahead and drop down and check out their homepage. And the reason we're taking a look at them, Bristol Myers Squibb, ticker BMY, out of the healthcare sector. They were down 1.47% on the day, closed out the day at $68.96. 52-week range as low as $65.95, as high as $81.44. So definitely creeping closer to that 52-week low here. Average volume is 8.6 million. Today's volume was 7.4, so less volume than what is typical. And you can see that kind of sell-off, especially after, looks like it was shortly after noon, definitely a sell-off for the remainder of the day. Market cap of $144.732 billion, a beta of 0.42, so they are less volatile than the overall market. That's what beta means. Basically, 0 is the market. Anything above 1 is higher than the market. Anything below 1 is less volatile than the overall market. PE ratio is a little elevated at 23.38. A lot of pharmaceutical companies are. Our earnings per share, EPS, is $2.95. And their next earnings date is coming up April 27, 2023. For dividend is $2.28. They are a quarterly payer. We'll see what they pay out per quarter per share here in a moment. And they have a nice dividend yield at 3.26%. Ex-dividend date was January 5th, so you missed the last one. They may have already paid out. We'll see that here in a minute as well. So you may not get, if you were to buy them now, you would probably not get the next dividend payout unless they've already paid. And the one-year target estimate, at least according to Yahoo Finance, where I pulled this information, I am not affiliated with Yahoo Finance, just one of the sources that I like to go to. They have an estimate of $82.44. Now, I always recommend more than one source. So another source I like is stockanalysis.com. Obviously, there are other sources out there. You pick the sources that you like, but I always recommend more than one source so that you can back check the information that you're getting is correct. And they have 28 stock analysts that have taken a look at this, and they call it a consensus buy. They have a low estimate of $62.62. That would be a 9.19% decline from where it currently sits, and that would actually be a new 52-week low, which is not uncommon, right? Actually, Johnson & Johnson just set a new 52-week low, so I'm hoping that it continues. Johnson & Johnson, for example, is in my portfolio. This one is not. I'm hoping that it continues to pull back, so that's where I like to look at them, at the 52-week low, or as it's setting a new 52-week low, I'll buy them as they pull back, right? Average estimate is pretty close to what we saw on the previous page, $84.09. That would be a 21.94% increase in the stock price. And if it happened to hit their high of $99.75, that would be a 44.65% increase in the stock price. All the while, you'd be collecting that 3+% dividend yield that we saw on the previous slide. Now, this is where I would typically show you my position. I do not have a position in Bristol Myers Squibb. It is one that's on my watch list. If they were to pull back significantly down below its 50, I would probably look to add them at their 52-week low, or maybe even a little lower. There are some positions in my portfolio currently that I'm trying to build out. But again, a quarterly payer, they pay out 57 cents per share per quarter. And you see they just had a dividend raise here back in October. They paid out 54 cents this past January. And it looks like their pay date was February 1st. So if you did buy them now, they've already paid out this last dividend from the ex-dividend date in January. So you would be in line for the next dividend payout. They do have a 72.7% payout ratio. I like anything under 75%. So this is just under where I like it. And their dividend growth is nice at 8.96%. Now, if it was to creep up a little bit above 75%, this is one I would probably stay away from. Again, I start to worry anytime a company gets over 75%, but at 72.70, I'm not worried yet. And if they increase their incoming revenue, obviously this would go down, and their cash flow along with it, this would go down. So that is Bristol Myers Squibb. Let me know what you think of the company. Is it in your portfolio? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join me on this journey to financial freedom. Hopefully, you are on your own journey as well. And if you have not started your own journey and you want to start a brokerage account, I do have a Webull link down below. If you use that link, sign up for a Webull account, deposit some money into that account, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. But like I said, hitting that thumbs up, letting me know you like the videos, dropping a comment down below, and subscribing to the channel and ringing that notification bell does help a small YouTube channel out like me as well. There is a YouTube algorithm, so the more you share the videos, like the videos, comment on the videos, the more it gets shared with other people and helps get the word out. And that is really what this channel is all about. I've mentioned it before. I come from a pretty poor family that didn't really invest, and I did not start investing till I joined the military in my 20s. This would have been back in the early 2000s, right after the dot-com crash. Now, over the years, I have pulled out some money and done some other investments in real estate as well, which I've done pretty well on. But recently, I've gotten back into investing. I think the market is going to pull back significantly with rates going up. Typically, it does. So I am enjoying the red in my portfolio when it's there so that I can decrease my cost basis, increase the yield, and increase my future returns. And that, in my opinion, is what it's about, and really about that dividend return. I like the cash flow provided by those dividends, that passive income for doing nothing but buying good companies like this one, Bristol Myers Squibb, holding them for the long term and collecting those dividends over time. If you're into that sort of thing, go ahead and hit that subscribe button down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have some stocks that you'd like me to cover, I do cover suggestions from people in the comments section down below. So drop it all down below there. Or like I said, criticism, if there's things you don't like and would like me to adjust, I'll take them with a grain of salt and possibly into consideration. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.